So continuing on our previous video where we talked about transferring a company car to a related party, to you, maybe a director, whatever it might be. Now, the previous video we talked about how it impacts the company, but this video is all about how it impacts that related party and a little bit about the company too. So based on that previous video, if you haven't watched it, go back and watch it, right? Because this will make more sense. So in the previous example here, the market value of the car that we were transferring was 24,200. So then what is the actual cost to that related party who's actually buying it, right? That could be a director, it could be a shareholder, maybe it could be your son, I don't know, maybe someone related in the family. But effectively, when you buy a motor vehicle, right, it's a new owner, there's no discrimination that you bought it from a related company, anything like that, there's going to be stamp duty. So in New South Wales, I'm saying based on the calculator on the Service New South Wales website, it said that $726 of stamp duty would be paid. So effectively, if the car's being purchased and the person buying was just to transfer cash for that purchase to the company, the total cost really to the person buying it is going to be $24,200 to the company, then also some stamp duty, which comes to just under $25,000, so $24,926. But let's get to reality of what is actually going to happen. You don't have that cash lying around. That means that basically we've still got this sale. So then you personally, because you've purchased a vehicle, you still got to do the transfer of the vehicle, right? But it means that you're borrowed or you've got a loan now with your company. So how does that loan then look? Now, this is the short version, but this would basically fall most likely under a Division 7A. But effectively, when you are a related party are borrowing money from your company, you need to treat that transaction at arm's length commercial, right? So basically, it's just like you borrowing money from a bank, but you borrowed money from your own company. So in that scenario, like if we would have to use every year the ATO benchmark rate to determine what the interest on that loan would be. So I'm assuming that for 7 years under a Div 7A loan, that the interest rate would be 8.77 every year. But then that also means that there would be repayments you got to make, right? So those repayments, they could be actual cash loan repayments that you're making, or it could be even just income that goes in your return. If you want to know about Div 7A, go back to one of my previous videos. But effectively, it would mean that the $24,000 to $24,200 is paid back. There's also interest of $9,199 over that term. There's also the original stamp duty. So overall, that total cost of transferring the motor vehicle is $34,125 if you did it under a loan scenario. Any comments, questions, leave them below.